Good morning. I'm here getting myself educated on what's called interest rate swaps. I have no idea how they work, but the intention of them are for commercial real estate investors. Typically, when a bank loans you money to purchase or refinance a commercial property, a 5 units multifamily or above, or a mixed-use commercial building or retail office space, typically, because they're holding the loans on their balance sheet, they do not want to incur too much what's called interest rate risk, because when interest rates rise, those loans in the balance sheet that are locked in at lower interest rate loans will go down in book value. So typically when you go to finance a property, they'll only have a fixed rate for, let's say, 5 years. Sometimes there's local banks that will do 10 years, but most of them do not. So when you have a certain loan size, above a certain loan size in a property, a local bank will offer what's called interest rate swaps, which is a insurance product that allows you to lock in for a longer term period, let's say 10 years. So you're not taking on interest rate risk yourself. So it hedges risk between both parties, both borrower and also banks. So I'm going in to learn more about this directly from the purveyor of the product itself that sells it to banks like Canandaigua National and other community banks. So I'm going to learn some and share with you guys. Have a good one. Stay tuned. Okay, so I got actually a lot of great takeaways. There are 3 benefits that I took away from our meeting. Number one, as I said, an interest rate swap with a local bank allows you to fix your interest rate for 10 years as opposed to 5. The Federal Reserve is going to be continue hiking interest rates, so we're going to be approaching a raising interest rate environment. So if you are in a 5-year loan, then you have a great risk of interest rates of being caught in a higher interest rate, thus negatively influence your cash flow, and adding a unpredictable component to your financial underwriting of property if you don't know what the interest rate is going to be at the end of 5 years. So that's number one, is the benefit of predictability, because debt service is it's a significant portion of your business expense. Number two, because you are essentially when you use an interest rate swap, you are going to be having a floating rate day one with your bank, but that floating rate is going to be fixed using the interest rate swap product. It's a contract. So that being said, you would have no prepayment penalty if you decided to refinance your loan or sell the property. Typically with community banks, when you have a fixed rate loan, there's a prepayment penalty during the period where that loan is fixed. So that's number two. Number three, which is actually a really cool one and sort of an unintended byproduct, is that let's say if you lock in using an interest rate swap at 5.6% right now, if interest rates go up to, let's say, 7.5%, you can actually take that contract and sell it back to the interest rate swap company and make an actual hefty profit. Now, the only downside is that you would be eliminating that protection of the interest rate swap, and you'd be going back to a floating rate. But if you were anticipating that interest rates were to come back down anyways over the next 2 to 3 year period, and you wanted to capitalize on the value of that interest rate swap product, you could do so at that time, which I thought was pretty cool. There's a $5 million deal that we're looking at underwriting right now, where we're looking to use this interest rate swap. And let's say if interest rates went up to between 6 and 7%, then while we had that swap in place, we could actually sell that and make about $200,000 by selling that swap in that interest rate environment. So we could use that $200,000 to improve the property, to pay ourselves back for money that we put into the property already, or just take some money off the table and pay down principal, or do whatever we want with it. So that was my takeaways from today. So if you have any questions about interest rate swaps, I at least have some cursory information now, and we'll definitely using it on our next deal. So hope this has helped you, as has helped me, and have a wonderful weekend.